All right, everybody, let's go ahead and get started. Happy Monday. Welcome to the Ask an Analyst session. This is Chris Pulver here. It's 1 o'clock on the 31st of August. Everyone that's typing in the chat, hey, Denise, good afternoon. Hey, Steve. Hey, Philip. Hey, Joe. Hey, Austin. If all of you can hear me out there, will you kindly type in a Y in the YouTube chat, please? Just want to get some confirmation. Here's the setup here. I'm going to be in the lower right-hand corner saying, what's happening, everybody? And let's kick this off. Yep. Hey, John, how are you? Cool. So we are live. We are large. We're in charge. Let's go. Let's get at it. It's the SPY on the chart, and I want to take a look at this. Interesting developments from last week. It is August 31st, end of the month. Going to be a really important transition this week. So we'll take a look at the dollar index. I'd like to take a look at some of my favorite currency pairs. Perfect. Thank you for confirming for me. We'll take a look at my favorite currency pairs and just some setups that we're either in and participating in, robots that we're running, setups that we're looking at, and news that's coming up this week. So let's start off with the calendar for this week. I just posted, by the way, well, it should be probably in the next 30 to 45 minutes, my weekly outlook for my personal YouTube channel. If you just type my name in, I'll have my weekly outlook up here in just a moment. Probably after this session, I have to run it to clear things out for make sure I'm not infringing on any commercial rights. So, all right, cool. Nice to see everybody, and everyone's jumping in here now. So let's take a look at the news this week. We have some heavy Aussie news this week. We have the cash rate decision on Tuesday, so tomorrow morning. That's technically going to be Tuesday's trading day, late Asia session around 12:30 a.m. Eastern time, so that's just after midnight. We also have GDP data, which will trade on Wednesday's candle. That's quarterly GDP. Those are both high-impact news events for the Aussie. Aussie setups, I've been looking for a reason to see some Aussie weakness. Data-wise, this could help. Technically, it certainly could help. Dollar as well. We have big news on the Aussie, or the dollar this week with ADP non-farm and Friday non-farm. On that note, I will post in the chat right here. If anyone would like to join me for this week, copy link address. If you'd like to join me, join Chris for non-farm payroll Friday. There is a link inside the chat if you want to copy and paste that. That is a link for GoToWebinar. That'll be Friday morning, Friday, September 4th at 8 a.m. Eastern time. We can be live together and looking to trade the CAD news and the U.S. news. Friday morning, the news is at 8:30. So you can see me talking about that news right here. Let me drag this over. This will be the screen that I'm trying to draw on. Okay, let's try this screen here. Get off my screen. There we go. So this news right here. Okay, so that'll be our little end of week Friday extravaganza, CAD news and US news Friday morning. We'll start the live session at 8 o'clock. Okay, so all of you are welcome to join. That'd be fun. Currency strength chart for today, just to get in some live trading. We had some very aggressive JPY weakness. And really that was kind of a complete reversal of what we saw last week. If you were paying attention last week, you may have seen a video with me. Shinzo Abe, Japanese longtime, Prime Minister? Shinzo Abe? Or is he, no wait, is he Prime Minister? No, he's not Prime Minister. He was the Bank of Japan governor. I got that incorrect earlier this morning in a webinar. He's the Bank of Japan governor. Abe, 2% inflation. BOJ's been like this kind of poster child for super dovish monetary policy. He decided to resign for health reasons last week. So potentially disruptive. We're starting to see a lot of movement volatility in the JPY pairs. I think this just kind of starts rolling into higher volatility through post-summer trading. September, October, we know we have a U.S. election year coming up early in November. I think that you're going to start noticing that the gaskets are starting to fire. The circuit breakers are triggering. We're going to see a lot of movements, and sometimes it might not make perfect sense, but if you're out there, we're looking to participate. Okay. All right. Let's see. Tyler, if you're watching this, could you share that link as well? I'm going to share this link with you right here. Okay. can you share this direct link? All right, I'll have him post that for us. Okay, I'll have that so it actually should be a direct link. Okay, all right, so that's currency strength. Let's go to the charts. Last week, the SPY, the S&P 500, ended up, I believe, 3% positive on the week. I took a little screenshot of this morning for my weekly outlook. The Dow Jones was 2.5% positive last week. The S&P 500 3.25% positive. Nasdaq over 3.33% positive. The markets continue to push. Jackson Hole was last week. The markets liked what they heard. They heard that the Fed is going to continue to remain accommodative, be very dovish, and they are. I mean, right now it's like until there is a major disruptive catalyst, the path of least resistance is to stay bullish. Right? It's ride these profits, it's ride this bubble, it's ride this, whatever you want to call this. If you want to see this as irrational, it is. We have PE ratios now at historical highs once again across the board. We have big tech in the U.S. worth more than the entire U.S. stock market. Look at this. This is from my Robinhood newsletter. U.S. tech stocks are now worth more than Europe's entire stock market. That's crazy. Doesn't stop. Okay, so if you're in the money on some of these positions, if you're riding some of these big bottoms back in March and April, it is a great time to be looking at moving trailing stop losses, protect those profits, right? So that's what I'm looking to do. If I have good positions in that I'm still profitable and running, I'm using trailing stop losses. I will make sure that if we have any type of disruptive catalyst, if we see the market trying to do something squirrely in September, October, prior to the election, I want to make sure that I'm doing what I can to protect those profits. Okay, Uche, yes, this is live. Tell them, everybody, we are live for sure. Okay, no trolling, right? Last time we had a troll in here when I was just solo, he was like, this isn't live, this isn't live. No, we're live. All right, so the SPY broke the highs back in February. I would not short this rally, all right? I mean, I know it's tempting, we're interested, but I wouldn't be shorting this until we have better confirmation on the right side of the trend line. I wouldn't be shorting this until we had more evidence that the bears are giving us a massive indecision, or we're just simply breaking the trend line. Okay, what else are we going to watch for? This was a good note from last week. If you're looking at, when is a, near-term top going to happen in the stock market, we can look at something like the Volatility Index. So this is an instrument VIXY. We actually had a higher low form last week around the, I think it was the low 20s. We had a higher low. Hang on a second. Take your pick. All right, so I'm loading up the VIXY right here. What are you doing? All right, my dog's going to join us today if that's cool with everybody. Here it is. So the VIXY. Perfect. Yep, thanks for putting that in, Tyler. That's the direct link for non-farm payroll on Friday for everyone that wants to join me. So the VIXY, we're sitting at 21.19. We had a higher low form last week. We did have, if I'm not mistaken, we had some pretty massive expirations last week. I think towards the end of the week, maybe it was the 28th. The 28th, we had some pretty heavy expirations. That's probably why we got a bit of a jump there. I am wondering if with the Fed's current position and their current stance and their narrative and their rhetoric and how dovish they're going to look to maintain that monetary policy stance, if we will continue to see suppressed movement on the volatility index. So here's how I know. If we see the stock market continuing to drift higher, we will probably see the volatility index go lower. Now, this is the VIXY, which is an ETF that trades alongside the VIX. So what I'm really looking at is the VIX, and then I want to trade an instrument like the VIXY or the VXX. I talked about this in my trading room quite a bit. So if the stock market continues to rally, then we'll probably see this VIXY and the VXX be suppressed a little bit lower into possibly these lows over here. Okay, so I'm looking at levels. I talked about this, I believe, last session for our AAA with Tyson and Gary. I talked about buying the VIXY at $15 and again at $11.50. I talked about this in my trading room. Those are pending orders for me. Now, I am looking for some option plays, but most likely I probably won't just put in an open, an open option or like a naked call and just have it roll over and try to get paid on this. What I'll probably do is put in an in-the-money call and just let this thing trade and try to put a pretty tight expiration on it to get paid on it. Or I can just look to buy the ETF and see if this one, over the next 2 to 3 months has some good volatility. I expect implied volatility and expected volatility to be much higher due to the election coming up in November. So this is what I'm watching to see if and when the stock market will show some corrective signs, meaning that the stock market might sell off as a whole, that the volatility index should be going up. So here's the correlation. If this goes down, that means stocks are going up. All right, so I'm going to type this on the screen right here. So if we see stocks going up, we're going to see the VIX going down. If we see stocks going down, we're going to see the VIX do this. And I'll draw an arrow. If we see stocks going down, then we should see the VIX going up. So we should see an inverse correlation with that. And so until the stock market changes really its course, I'm looking to see, can I get filled at these really, really nice levels and just have it be down here near these lows and try to get some jumps. Now, I don't know if we're going to return to the, mid-March highs like we had with COVID and all the uncertainty and just, what do we have? Asia markets were suspending trading. The U.S. market stopped trading a couple of times or at least froze for a couple of hours here and there to kind of organize the chaos. But anyway, I don't know if we're going to have that type of volatility again, but I think we will at least have some better volatility. So a couple ways I'm looking to trade that. When I'm talking about some setups this week, I really want to pay attention to the dollar index. This was last Friday's move. One thing that's very difficult and continues to be difficult is going to be calling tops and bottoms. Okay? So look, I told traders for the last several weeks, I'm not interested in calling tops and bottoms. But if I was looking at this chart for the first time, I am going to be looking for opportunities to buy the dollar. Okay? So we are sitting here with lows in price, lows in price. Okay, I should say lows in price, and we have a third low from last week Friday. So we have lower prices, right? Lower prices, but we have momentum that's disagreeing. That's divergence. We also registered oversold conditions. Now, like I said, I'm not calling the bottom, but I do think if you give this time, there will be bottoms forming and we will have a corrective move to the upside. So setups that I'm particularly interested in. I am already in the Aussie dollar and I'm looking to sell. So I am actively short right now on the Aussie dollar. Euro dollar, I am actively short. Pound dollar, I am actively short. I'm looking to get short. I actually talked about that in a session this morning. I had a robot deployment. So if the pound can get lower below 31.85, I'm looking to short that. Let's see, dollar Swiss, I'm actively long. Okay. Any other ones that I'm forgetting? Dollar CAD. I actually didn't look at dollar CAD today. Let me see where dollar CAD is at. But look, the point is this. My dollar index, although it's not perfectly correlated with all these currency pairs, what this dollar index is showing, in addition to all of these technicals. Look, Aussie dollar has a ridiculous bar count with my right trader system. It has some of the best technicals that I've traded over my entire career, where I'm looking for highs and lows to form. This one is definitely forming highs. Euro dollar, definitely forming highs. I'm looking to short it. Pound dollar, definitely forming highs. Okay, so the technicals, not only with the dollar index by itself, but also with every individual currency pair, is setting up for some dollar strength. Okay, so here's the hard part. The hard part is staying patient. The hard part is keeping the trade size correct. The hard part is, not getting in too early. The hard part is, if we're guessing like, well, where's the absolute top or bottom? I don't know. But we can find it by either staying a little bit more patient, waiting for confirmation, or we don't have to get in right now. What I can do, just use this as a little lesson. I teach this all the time in my trading room. Look, if we have price doing this, okay, follow me here. Let's say that we have price doing this. So I will actually I'm going to use the freehand tool so I don't mess up my analysis. If we have price making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and when I start looking at this low in price, this low in price, this low in price, this low in price, and there's a trend line that I'm waiting for. Now, when we see lower lows in price, but disagreement with momentum, and we also see oversold conditions, Okay? These are really powerful alignments on, on every time frame, but to me, when it comes to these major seasonal tops and bottoms, I'm looking for higher time frames. I'm looking for daily and weekly charts. So rather than saying, okay, here's my opportunity to get in really, really low. Look, if we keep going down, 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 it's going to drive you crazy to pick that low, especially if you're not right. So rather than picking the low, we can do two things. We can wait for price to get on the right-hand side of the trend line. That is probably the hardest thing for traders to do. If you are looking for an opportunity to buy low, the hardest thing for traders to do is wait for price to break a trend line. It shouldn't be that difficult, but it's just, look, we see that this is a very appealing level. This is a very tempting level to get in and try to get a really nice fill. If we're right, this is a great spot to get in. But if we're not getting the confirmation, if we don't know exactly where to put our stop loss, then it makes sense that when it gets on the right-hand side of the trend line, we can consider this low as our stop area. We can consider the backside of the trend line a stop area. And we have a little bit more of a, concrete plan to expect price to give us the correction and the move that we're after. All right? So patience goes a long way. The technicals are here to give me the trade. So I'm anticipating the dollar strength because those higher time frame alignments are telling me that it's coming. Now, I'm looking for price to support that. I'm looking for price and confirmation and patterns to support that. We'll get it. Eventually, we'll break the trend line. Eventually, we'll have a bottoming formation. Eventually, our systems will turn bullish. If we're looking for dollar strength, we're going to have to see some dollar strength on those currency pairs. Right? Makes sense? So the way to trade that is if I had, let me just draw that again. So if I had those levels and I wanted to see a trend line, so I can draw a trend line here. I like trading it like this. Let's say that price breaks a trend line. Usually what I'm going to do is either consider an entry either on the confirmed trend line break, or, and this would be a small trade right there, or I'd look for a retest to the backside of the trend line for a trade right here. And then I'm just going to be patient because what I want to see again is maybe price can go higher, right? Maybe price can come up here and start pushing. Well, I can also add to my winning positions. Right? I can add some trades up here going after some of these great retracement levels, going after just a push and trend now that's going from all these lows, starting to form higher lows and start to go higher. But if we start trading the right side of the trend line, trade nice and small, put in a nice safe stop area, we can add to a winning trade. So I like to use buy stop levels. Okay, does everybody know what this is? So a little lesson here, buy stop orders. What that means is price must cross the level to fill your order. Now, if you're a buyer, and this is a note here, so note, if buying, the spread can fill the level. So if I am sitting in a trade like this, let's say price is right here, and I put a buy stop level right here. Okay, so let me draw this out. So if this is current price, I can put a buy stop level above that. Now what's going to be required is that price is going to have to move to the upside. So current price is going to have to go higher, higher, higher. And yes, like I said, the spread can fill you on this, but at least it's showing you that price is cooperating and moving bullish versus trying to put in a buy here at the low and then it goes further against you. You put in another buy here at the low, it goes further against you. Put another buy in here at the low, right? I mean, I've done that too. It's not as fun to guess where the lows are when you keep adding to a drawdown. But when we have confirmation of price goes our way, now we can have buy stop levels here and here and here and here. And if price continues to cooperate, we get filled on those trades. We're going to be managing profits on the way up. And if price goes back down, we don't get filled on all the trades. So it's like we're only getting entries when price is cooperating for us and going to the upside. Okay. So it's a good way to, kind of test the levels, make sure you get some confirmation, and put levels and put entries in at a spot where price has to cooperate and go your way versus just guessing where those tops and bottoms are forming. So a little lesson on that. So that's what I'm looking for on dollar index. Like I said, if I was looking at this chart for the first time, I'd be looking for dollar strength. If I was looking at Aussie dollar for the first time without a bias, without active trades in, I'd still be looking to sell it. Euro dollar, I'd still be looking to sell it. Pound dollar, I'd still be looking to sell it. Dollar Swiss, I'd still be looking to buy it. Okay? So what am I looking for pattern-wise? I'm looking for this. Do we have a bit of a falling wedge here? Possibly. Could we come a little bit lower? Possibly. Look at our lows in price. Look at our disagreement in momentum. Look at our lows in price. Look at our oversold conditions. These are all of the right signs. Now, I know that this pattern right here could still push lower. I know this pattern could push lower. I mean, heck, we haven't seen really a flash crash on the US dollar, but we could certainly get one. If we get a little flashy move on the dollar, we're probably going to put in a low and start making that technical move back up like we planned. Just preparing for that. Okay? So I like the technicals on the dollar. I know the dollar index looks like it'd fall a little bit lower, which is right here. So this is dollar Swiss. We have levels around 88.50 I'm watching. Dollar index, we're coming back into those 2018 lows right over here. So massive range on this 2018 breakout. So is it path of least resistance? Maybe. Maybe this is a falling wedge like so. Maybe we have a near-term move to the upside. Maybe the hardest thing is that the dollar doesn't really have a U-turn, but instead just keeps drifting until we have this support level. And then we go back up. But the further this gets overextended, the more imbalanced this gets, the more likely it's going to snap back. Okay? And all it would take, and this is what I think, this is all it would take. If we see dollar weakness here, all it's going to take is risk-off trading to get it all back. That's how fast things will move, right? Just like we saw here. We had risk off, risk on, risk off, and then all of a sudden the dollar just kind of decided, the dollar's going to get super weak, the Fed's going to be super dovish, and the market decided to price in a lot of this current stance that the Fed is taking. So that's why the dollar is, has been like one of the better trending pairs in the last, and again, it's weird that it's happened in July. Like we saw mid-July to late July trend on dollar pairs, and it is what it is. But now it's summer. Post-summer trading, September, I think a September one kind of is a clean slate. I'm looking for some tops and bottoms to form. Okay, so like I said, for my session today, for this Ask an Analyst, I know we can go through a bunch of currency pairs. I'm telling you my favorites. My favorites right now from a technical standpoint, they're dollar pairs. Okay, yen pairs I'm a little skittish on. Dollar yen, for example, is a mess. We had extreme yen weakness today, but the dollar yen is still stuck in this area. If you look at the euro yen, okay, euro yen pushed right back up to the highs. So even with Abe's resignation last week, we had, this was last Friday's sell-off candle, and then today it pushes it all back. Doesn't mean that this is a, guaranteed direction. I will say that if we spend some time going sideways here on this euro yen, this would look pretty impressive for a rising wedge where I would be getting short on the right side of the trend line. So a lot of confirmation is needed. Okay? So I think that right now the markets are giving us, like today, for example, we're getting decent volatility. To the downside, we had negative 90 on the strength meter. And currently we see that the Aussie's taking a little bit of a back seat to the CAD, which should be helping that Aussie CAD. Hopefully it is. I know it's back up towards the highs from last week. Okay, Steve says I'm living that dream. Yep, I'm right there with you, man. And somebody actually commented this in my YouTube channel. Somebody's like, hey, Chris, I'm in these drawdowns from these trades. It's like, okay, well, that's a drawdown. I'm in a drawdown too, but the drawdowns are relative to my account size and my trade size. I trade small. If I had a $5,000 account or $10,000 account, I'd be trading micro lots. Absolutely trading micro lots. Okay, the fact that I have six figures that I'm trading, I still trade micro lots and some mini lots, and I build up positions. So, but all of my drawdowns right now are all manageable. I'm in I think across the board on all my positions, I'm probably in about a 3% drawdown across everything, which is totally manageable. What are you doing? All right, my dog's having a little bit of an episode here. Okay, so Aussie CAD, looking for this 18127 resistance zone. This is what I'm watching for right here. Do we come up here to equal highs? Equal highs and then fall. Very possible. Technically speaking, it makes perfect sense if we have this. We have this low to high swing, no pullback, no pullback, no pullback, no pullback, no pullback, no pullback, no pullback. If we break this trend line, we should be falling back down into some respective wave cycle. So this is all wave 1 and then wave 1's extreme. We really haven't had a wave 2 correction. Aussie CAD is in this cycle. Aussie dollar is in this cycle. So I think Aussie CAD could be a nice drop. Where am I looking at it for? Come back to 9,200, I'll be happy. Come back to 93.25, I'll be happy. Okay, my break even's pretty high in Aussie CAD. It's pretty high in Aussie dollar. So I don't need a lot of movement to get paid on these trades. I just need it to technically cooperate, which in the Forex market, we see that work out most of the time. Okay, so I do like that trade. Someone had mentioned gold in this session, so let's take a look at gold. Okay, I've kind of turned a bit of an eye to gold. Like, look, I don't want to buy gold. I know that everyone thinks like, gold is just going to continue to run and maybe it blows through 2050 again, but it's not doing anything right now, right? So did we run too far too fast in gold? We did, but we had that kind of violent correction, and now the market's just catching its breath, right? We had this, this rally here, all this consolidation. I told traders, look, as much as I don't want to buy it at 1750, if we break out there, we've got to be long. And boy, were we happy we got long. Or stayed long, I should say. Rather than having it go against us on the trend line, it just broke higher and stayed higher. This is where I was telling traders, move your stop losses. Move your stop losses, trail your stop losses, protect those profits. So now that gold has become this like mainstream instrument, everyone's looking to trade gold. Look what price is doing. Nothing. So I'm waiting. I'm watching. I want to see, does gold support this trend line? Right? If it supports it, okay, then we see gold continue to rally off that. Otherwise, if it's not able to break the highs, if it's struggling to take out this high, then I expect this to be sideways. And we'll have to figure it out. But this is probably at historical highs. I don't have any evidence of how much higher gold can go. We're essentially just saying that gold's going to go higher because the dollar is weaker and this is an inflation hedge. And this is a hedge against the stock market. So stocks are going up, but so is gold, right? So are 10-year and 20-year treasury notes. So it's like the market's trying to price in risk-off trading while also flooding the equities market because there's got to be yield somewhere. So I'm telling you, like, these correlations are really strange. These extremes and these like highs and lows and these bubbles that seem to be forming are really strange, which means it's not different. It just means that it's looking weird, it's looking different, but it's still going to end probably very badly. Okay? So gold, I'm not interested in doing anything with. If you were long gold, you should have been protecting those profits. I'll come back to gold later, but I think silver is the better play. Okay, silver is at 28 and change. I still hope that there's a bit of a dip here. Okay, so we have highs around 30 bucks. Am I going to buy silver at the highs? No. If we came back down to this low again around $23 or $24, I would say, okay, small trade. If we came back to $20, definitely getting into silver around 20 bucks. I would buy silver at 20, I would buy silver at 16, and I would sit and I'd hold it. Okay, I was in silver, like SLV and instruments around trading paper, paper trading silver. I was in from like $13, $14 for the last couple of years. And I got in pretty heavy, and I got in multiple times, and I added to my winning position. And by the time we crossed this $20 mark, I was cashing out. I could have done a much better job and managed profits as we ended up getting close to 30, but I was already pretty happy that, I had some profits. So I think silver is a better buy just based on price. I hope that the technicals give us a chance to buy a dip. If we fail at this high, if we get oversold conditions, we have disagreements. If we get back up to this high, I hope we just put in a bit of a range. Maybe this range is enough to come back into equal lows. We can start looking to buy, start looking to buy, start looking to buy. But I would be like medium long term, I'm bullish on silver versus gold. Okay, cryptocurrencies. Bitcoin is still hanging tough around 11.7. Nice support around $10,300. This is just a neckline area. So as long as we stay, pretty healthy above $10,000, Bitcoin should still want to rally. I think Ethereum shows the same promise. Okay. Yep. Gert says as long as the Fed's printing money out of thin air. Yeah. I mean, is the true value of a U.S. dollar now like worth less than a penny? I think is how much dollars are in circulation right now. I think with the actual value of the paper bill is like less than a penny. That's cool, right? Anyway, here's Ethereum. Nice jump to the upside in Ethereum. We're at 434. I am looking to see where we can go. Are we having just, new highs? We have new highs from 2019 to 2020, new highs. Look left on your chart, find, I mean, look at all these beautiful highs right here. Previous high, previous high, previous high, big high way up here. Okay. So, I mean, we have room to run. I mean, I know that 2017 highs may be the long-term target, but we're either going to see this thing be very range bound for kind of the trader's world, or we're going to see a new breakout level, which would be right in here. If this is in fact, let me draw a straight line. If this is a new breakout point, past resistance becoming future support, it would make sense that this level is now supported. So if we can get, further pushes and higher lows continuing, then Ethereum looks good to continue to rally. Let's see a new breakout. I did talk about this in my trading room, but I want to see perhaps if this measured move right in here can just simply be doubled, right? If we double this. So we'd be looking at Ethereum to go up towards like $700. And I'm fine with that. Okay. One thing I want to talk about really quickly is, let me see if I have a screenshot of this. I do. Let me talk about this. So you're going to start seeing, and I think Tyler's posting some links about this. There is a free ebook out there from us. It's a trader's blueprint. And inside there's a section regarding grade your trade. And so what we are asking traders to do, and I'm going to do this week in my trading room, if you have screenshots on your smart trader charts, screenshots on your MetaTrader 4 charts, if you have trades out there, what we are asking traders to do is take those screenshots, share those ideas inside Smart Trader, post those inside our MTI Family of Traders Facebook page. And myself and Gary and Tyson and our analysts, our teams, will be going in and grading those trades. Okay? So we want to see, kind of the mindset of where some of our traders are at. How clean are they setting up their charts? Is a trader typically looking at like a 1 hour chart only? We looking at daily structure, weekly structure? We just want to kind of get a feel for it. And again, we'll offer our, honest and unbiased opinion. So I'll say this, even if you could post a trade, you could post a grade your trade screenshot, and you could be long Aussie dollar, you could be long euro dollar, and I would still give it a high grade as long as it fits some type of parameter where you have a trading plan, right? If you have a plan, that's where this grade happens. Okay? So if you're interested, there should be a link in here for this grade your trade stuff. It should be in our blueprint section. So let's see, take a deeper dive. That's in my Flex trading room. Okay, so we should see that link post in here just a little bit. So like I said, download the ebook or get the free ebook. Inside there are the credential or the criteria for grading your trade. Like I said, post this on our Smart Trader charts inside the community. You can post that idea inside Smart Trader, or you can post some screenshots and charts inside of our Facebook page. So to do that, you can just doctor up your charts, make it look how you want. Take a screenshot, which you have a camera icon here. Okay, you can save this image, and you can also share this as an idea. So if you have a chart, you can share this as an idea. This goes onto our community page for Smart Trader, and we can find it. So I recommend that you label it as grade your trade. Maybe if you're taking a trade on the Aussie dollar, you can put grade your trade Aussie dollar, and we'll take a look at it. Yep, so there you go. So you can see that in the chat right there. Tyler just posted it. So you can get the checklist with that MTI blueprint. Perfect. So the trading blueprint and the grade your trade. Okay. All right. Anything else for today? So silver I like long. Bitcoin, cryptos are working pretty well. Right now, this is what you need to be mindful of. Okay. Path of least resistance. And this is not just in stocks. This is not just in U.S. indices. But this is also in currencies. So do we have extremes that will continue to stretch? And this might feel very weird, right? Like, oh my gosh, I can't believe the dollar is going that low. I can't believe the euro dollar is going that high, or the Aussie. Look, I get it. I'm looking at the same technicals you are, okay? Now, I've made a lot of trades over the years. I know that I'm not always perfect when it comes to the top, the bottom, but I know what to look for. And I've been looking for the same thing for years and years and years, and it's continued to pay me profits. So although it's stretching further, although the path of least resistance might be the same trend that's been going on for the last 3 months, it's still leaving all of the evidence that we trade to. So for example, if we have this overstretched move and we have all these crazy extremes, and I have pockets and I have pivots and targets and all these Fibonacci levels that have been untouched or imbalanced, it's the same thing that when we have these stretched moves at D extensions, we're going to have a wave cycle. It's just where and when and how do we participate when we finally have better confirmation. So there's a lot of things to make sure that you're not putting yourself in harm's way. Make sure you're keeping plenty of margin and cash on the sidelines to put in with confirmation, put in when it's time to strike. Because I think there will be a lot of opportunity, certainly a lot of opportunity over the next couple of months. Tons of volatility ahead going into October and November with the election. And we still have the rest of the year to finish the year. Is it a Santa Claus rally? Is it not? I mean, all these things are up in the air. Okay? So I want to make sure that we're not doing anything crazy. We're taking good trades. We're following what we see. But I have great setups. I like the setups I'm talking about today. I like the setups I'm sharing in my weekly outlook. But I want confirmation to make sure it's a little bit safer to get in. I'm trading nice and small. I'm not going to overstretch my margin. Okay? All right. So path of least resistance in stocks, until we see a major disruptive catalyst or a major disruptive candlestick or price action, stocks are going to stay the same. Regardless of all the insane concentration that big tech has, I mean, the top 5 companies, the big tech companies, are essentially 25% of the entire market cap. Big tech is, more than the entire European stock market. PE ratios are back up towards like 26, which the last time we saw that was back in 2008 and 9. Okay? So anyway, lots to discuss. And as, Tyson and Gary and all of us will kind of wrap up these sessions and talk about, it's important to be in a trading room. It's important to talk about these with the community. It's important to talk about these, setups and trades and be objective, right? Let's try not to be overly biased. Let's be willing to say, look, if this isn't your confirmation yet, we need to find a better trade. Okay, so for example, if I go to the dollar index, I want a low to form. And I know that a low should be forming here relatively soon, but if today is not the day and tomorrow's not the day, and I mean, look, it's fine. It's going to take time. Maybe the path of least resistance is dollar gets pushed into this major support area. And then we break this area. If we see any risk-off tone in the markets, the dollar comes back, and it comes back soaring. If the yen is sideways and choppy, the yen's going to make a big move too, probably around the election. So there is a lot of stuff to consider. But that's fine. That's why we talk about it in trading rooms. Okay. Any final questions for me today? If not, we'll go ahead and wrap it up. I look forward to a great week in the trading room. Let's try to make some pips. We'll get some robots running as well, or just kind of keep tabs on current robots and where they're at. Do we need to start modifying some of the setups? Do we need to start switching on or off certain robots to take advantage of current conditions? Today is the end of the month. So finally, post-summer trading is officially done. We'll see how September kicks off. We're going to have new monthly targets this month, right? So again, we'll talk about this week in my trading room. I know Gary and Tyson will say the same thing. So we'll see you in the rooms. We'll see you in the sessions. Let's have a great week. Yep, Tommy, I'm still short. Yeah, Aussie CAD I'm short. Aussie dollar I'm short. Euro Swiss. Let me take a look at Euro Swiss really quickly. Euro Swiss, we're at 107.82. Big level on Euro Swiss is to break above 108.30. So I'm looking for a breakout above this yellow box right here. If we can get a full daily close above this yellow box, then I think our Euro Swiss is primed to go to 110. So some to watch. Some are looking at breakouts. I took a trade last week on Euro Pound. Oops. Euro Pound right here. Yep, so that breakout below 89.15, 89.25. Looking for this to stay bearish towards 87 and 8,400. So I want to see if this is the start of a nice breakout in this Euro Pound. Okay, my first level is right there at 87. I do think this has enough to finish all the way down here at 84. So if you're in my trading room, we talked about these yellow boxes. If you're seeing us talk about them, Gary has some fancy ones on his chart. But if we have breakouts, that means we're looking for expansion cycles to get underway, trends and breakouts to get underway. Okay, robots-wise, I use Perfect Storm. I'll type this in the chat really quickly. So Perfect Storm. I use the Equalizer. I use Right Trader Max. I use SSL Auto and MPD Auto. Those are my primary robots that I'm actively, toggling and deploying and trading and managing. Okay. Steve says, how long will the JPY run south? I don't know. That's a good question, Steve. I mean, look, the movement for the yen. I mean, again, I look at the same thing. Technicals. Are we getting overbought? We're getting there right now. With today's move to the upside with 1, 2, 3, 4, 5, 6 daily candles in a row, we're getting back very quickly into overbought conditions. We had overbought conditions right here when we had that really aggressive sell-off in June. We also have new highs in price, and we're showing equal highs in momentum. It's not quite the disagreement I'm after, but I think that this could be the run up to form the top or bottom on some of those pairs. Right? So I'm still looking for some tops and bottoms. I'm still looking for some of my yellow boxes to give me some breakouts. I mean, I have been pretty much on repeat talking about this transition period in August for the last 2 months. So there's things we have to just kind of soak in, digest, wait price to confirm for us, let the candles close, and make some good decisions. Okay? All right, traders, that's it. If you have any questions for us, let us know. Feel free to leave some comments in this channel. Feel free to make sure you subscribe to this video or this Market Traders Institute YouTube channel. Click the notification bell for sessions like this when we go live. If you would do me a favor, for everyone that came in today, we had about 100 that were in live. Hit that like button. We still have 85 watching right now. Hit that like button. Hit the thumbs up button for us. And subscribe to the channel, click the notification bell. If you want those links, you can join me Friday for non-farm payroll at 8 a.m. Eastern Time. Tyler will post that one more time or scroll back up in the chat. You'll see that link for Friday's webinar. Okay, so that's Friday, 8 a.m. You can join me live for non-farm payroll. We'll see you in the trading rooms this week. Have a great week, everybody. Thanks for being here today for AAA, Ask an Analyst, and hopefully be back with all three of us next week. All right, take care. Happy Monday. Have a good week. Bye.